Traders Corner is proudly brought to you by IG Markets South Africa. Visit igmarkets.co.za.
Welcome back to Traders Corner, Summit's real-time, real money trading show. As always, I'm joined by Garth McKenzie, who is, of course, the founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, we've been inching towards 36,000 on the all-share index, but on very, very skinny volume. So I imagine this is posing a bit of a trading conundrum for you at the moment.
Yeah, it is. I know we mentioned it last week and said that things are quite slow and a bit lackluster, and unfortunately it's the same this week, and in fact probably even worse than it was last week. And we've just come off the lowest trading volume day of the year, yesterday being Monday the 27th of August. The lowest trading day. Look, to be fair, it was a public holiday in the UK, and a lot of our volume is driven out of the UK, so that is understandable to some extent. But the fact of the matter remains that it was the lowest volume that we've seen in the entire year. Yesterday was akin to the period between Christmas and New Year. That's how dull and dreary the market was. So it's been very, very lackluster. That's the one thing. The fact that it was a public holiday in the UK yesterday, but besides that, there are two other things. There's the fact that we're right at the peak of the Northern Hemisphere summer at the moment, so a lot of investors and traders, whatever, from the overseas markets are on their summer holidays, and this time of the year, August, is typically very thin. And the other thing which is also plaguing the markets at the moment is the fact that everybody is waiting in the wings to see what happens. Are we going to get a QE3 from the Fed? We've got Jackson Hole annual economic symposium this weekend in Jackson Hole,
Wyoming.
In Wyoming, yeah. And is Ben Bernanke going to announce something towards a QE3 or not? And there's a huge amount of debates for and against. So there's that. There's also the ECB. Are they going to bring more stimulus and a bigger bond buying program? And we'll know all of this stuff in September. But in the meantime, we all sit around and wait, and that's what's being reflected in the markets at the moment. So trade is very, very dull and very lackluster at the moment.
Just on that point of the ECB, I was speaking to Andrew Cantor yesterday, and he was suggesting that Mario Draghi and Ben Bernanke could use this as an opportunity to pitch some sort of combined response. And of course today we heard that Mario Draghi is not actually going to be attending the Jackson Hole conference because he's got too much work to do. So so there goes that idea. Although I mean, it does make one wonder whether actually there's going to be any sort of announcement at all.
Well, that's right, and the problem, I think, is that the markets are sitting on a tipping point, that we're on a knife edge. If we do get some sort of stimulus announcement, how much of that has already been priced into the market? And if we don't, is this market not primed for disappointment? So it's very difficult to know. And as a trader, as someone that's trying to make high probability trades, I find it difficult in an environment like that, because you kind of end up having to guess, which is not really what we're here to do. So as a result of that, we're not going to be doing any new trades this week, or next week for that matter, because I'll be away. But let's see. I think this does kind of feel like the calm before the storm, and whether the storm is a nice break up or maybe a correction in these markets.
Downwards.
Yeah, which way it goes we really can't be sure at this stage, but we'll know soon enough once all of this market moving stuff has happened in September.
Okay, well, let's review then the three open trades that you have on the portfolio at the moment. Do you want to start out with AngloGold or Coronation?
Yeah, let's have a look at AngloGold first. That's the one that's up on the screen now. And just to go back and have a look, I mean, what we had there was a big double bottom down at about the 250 Rand area. And my feeling has been that we've seen this rally up in late July and into August, and then a bit of a consolidation recently. What I'd identified there was what I believed to be a bull flag pattern within this new upward trend. And we did see the stock breaking out to the upside. And typically what you'd find is that you take that height of what's called the flag pole, and you normally project that up from where it breaks out, and then you can get a target. And in this case it would have given us somewhere in the region of about 315 Rand would have been our target. So we bought, for our portfolio, we bought 500 CFDs at a price of 276 Rand, and with a stop loss of 269. Now, I mean, we're still in the trade, but it's actually not looking fantastic right now. It did trade up to about 292 Rand or thereabouts, and we were looking great, but it's been drifting back now over the last couple of days, and in fact today it's been flirting with that stop loss at 269 Rand, which is tremendously disappointing. But if it gets below that level, then I'll have to cut it. You know, we always stick to our stop losses on this show. Our risk on the trade was only 1% of our capital, so if we end up losing, it's not going to be a crippling loss, but it will be a bit of a disappointment given that it started out looking good.
Yeah, it will also be, I'm sure, a bitter disappointment if there is news of more stimulus, because presumably that would send a bit of a fire under the gold price, which would ignite the gold shares.
Absolutely, it could, and we're going to look at the gold price chart a bit later in the show, just to show exactly where that is positioned, because it does look like we've got the potential for a breakout there.
Okay, so AngloGold, you're in it, but only just.
Yeah, sitting tight for the time being, but it certainly is flirting with our stop loss at the moment.
What about Coronation? That I know you were saying last week, it's also been a bit of a disappointment because it's just idling along. And looking at that chart, it doesn't look as if there's been any change to that scenario.
Yeah, it's still been idling along. What we had here was a nice steady upward trend that went back to the lows of June, and then we had an overhead resistance area at 30 Rand there. And my feeling was that if we saw a push out through that 30 Rand resistance, it could ultimately result in a fairly powerful move higher. And we've still got a target price of 32 Rand a share here. And I'm sitting tight. I mean, it's been trading at just above 30 Rand yesterday and today, so I'm comfortable to hang in there. I mean, we bought it at 29 Rand 60. We bought 5,500 CFDs for our portfolio. The stop loss is at 28 Rand 30, so it's quite a long way down from where we're trading at the moment. So I'm going to sit tight here for the moment. It is being rather lethargic and a bit of a frustrating trade because it's not really moving. But at the same time, it's far enough away from our stop loss. And to me, broadly speaking, that pattern over there still looks okay. I still think we could see an upside break here. So I'm going to sit tight with it for the moment. But it certainly is one of these shares that you have to be quite patient with. The volumes can be a bit thin at times, and one might argue that because those volumes can be a bit thin, should we really be picking it as a stock to trade? You know, is it not better suited to a more medium to long-term investment? And I guess there's a strong argument to be made there. We learn and we live and learn on this show as just as much, I suppose, as the viewers do. So knowing that and seeing that volume is a bit thin, you know, in retrospect, one can question whether we should have been putting it into a trading portfolio. Be that as it may, we're in it. It's okay for the time being, but we'll monitor the support and resistance and monitor that stop loss carefully.
Okay, so that's Coronation. Last week you put on a put spread option to take advantage of a potential fall in the market. Just remind us what it's all about, because these are fairly complicated, although really they do seem like great risk-free instruments to have at one's disposal.
Yeah. They're not entirely risk-free, but they certainly do give us a bit of protection.
Okay. Virtually risk-free.
The big risk would come if we were to see the market crash down below 27,000 in this case. But just to explain this graph, I'm not going to go into all the intricacies of how we constructed this. We did that last week, and for viewers that didn't see it and want to see it, the video clip is available on the Summit TV website and on the Traders Corner website. That was the show from the 21st of August. So anyone that wants to go back and look at how this option structure was constructed is welcome to do that. But this is the net payoff that we've got over here on the screen. And effectively what you can see along the bottom there is the levels of the top 40 index, and then the axis to the left, or the y-axis if you want to call it, is the profit and loss. So what you can see is this put spread structure starts to work for us below 30,000. While the market, the top 40 is above 30,000, we receive a small premium there. You can see 1,372 Rand premium payment into our pocket. If the market starts to fall below 30,000, then this structure will start to make profits, and it makes a maximum profit of 31,000 Rand if the top 40 was to expire at 28,500 in December. And then that profit starts to dwindle away, and you can see that down below 27,000 on the index is where we go into what I call the danger zone, where this structure would start to then lose money. Now, the key to this is, what I want to stress is that I'm not turning bearish on the market, but I do think that if we were to see a disappointment, say out of the Fed or out of Jackson Hole this weekend, or some of this news that we're expecting out of the ECB and the Fed in September, if it was to disappoint the market, we could certainly see a bit of a retracement in these markets. We could maybe see a 5% or a 10% pullback, who knows. And I quite like having this structure in place as a bit of protection, just in case. Bear in mind, it costs us no money, because we're effectively paying away no premium. We're actually receiving a small premium on the structure whilst the market's above 30,000. But if it starts to go below 30,000, we do participate participate with the profit on this structure. So that's my thinking. It's really just it's insurance more than anything else.
But as you said, if it's more than a 10% correction, then it starts to become a worry.
Well, if it falls below 27,000, which is about more than 15% away from where the market's trading currently. So, I mean, my feeling is that the likelihood of that happening is very, very slim. But there are also ways that we can hedge that risk out should we need to.
Okay. Garth, you mentioned you wanted to pull up a chart of the Rand gold price. Rand gold or dollar gold?
Dollar gold.
Dollar gold, sorry. Tell us why it's caught your eye, especially in light of the fact that you have an open trade on Anglo Gold Ashanti.
Yeah. Well, what I want to just show you here is that the gold price really has been, obviously it's been in a nice steady upward trend for the last couple of years, many years in fact. But if you have a look what's happened over the past year or so, the gold price has been narrowing into this triangle pattern. Now, triangle patterns like this one generally are considered to be continuation patterns within a trend. So, in other words, it's a type of consolidation within the trend, and usually it will break out in the direction of the prevailing trend. So in this case, the trend is up, and for that reason, we would expect that this triangle pattern would probably break out to the upside. That certainly, statistically, that happens about 65% of the time, that these triangle patterns will break out in the direction of the trend. So it's quite a high probability that we'll see a breakout to the upside here. What I just want to point out is that the parameters for this triangle pattern at the moment are as on the screen there. The bottom of the pattern is at $1,550 an ounce. That's where the support is. And then there's resistance at $1,680 an ounce, which is the top of that triangle pattern. Now, what you normally do with the triangle to get a target projection is you'll take the height of that triangle at the broadest point, which is what I've indicated with the arrow there, and then you'll project it out from the point where the triangle breaks out. And that'll give you your target projection, which in this case works out at about $2,050 an ounce based on that pattern. So we need to see the breakout first. We need to see gold going above 1,680 and probably confirmed on a move above $1,700 an ounce. But if we were to see that, then certainly it looks like it opens the potential for about another 15 to 20% upside in the gold price from there based on this pattern. And interestingly, what we mentioned earlier in the show about stimulus and the Jackson Hole and QE3 and all of that sort of thing is the gold price has actually started moving up already over the last 2 weeks or so. And one wonders whether this is not perhaps a little bit of a precursor to some sort of stimulus being announced. Because bear in mind, anything like a QE3 program would be tremendously stimulatory for assets like gold. We saw QE1 and QE2 was very good for the gold price. If there was to be a QE3, it could certainly do the same again. So I think this is an interesting chart to watch for the next week or 2 or 3, and certainly.
But wants a catalyst, basically.
It needs a catalyst, I think, yeah. But we've got some potential catalysts lining up, so let's watch it.
Garth, getting onto the portfolio as it stands, given that you haven't added any trades and Coronation's been a bit frustrating, what does it look like?
It looks like that.
Okay.
Where we've got our 3 open trades, basically the put spread on the December top 40 future, and then we've got our Anglo Gold trade, which is actually now running at a small mark-to-market loss for us, and then we've got our Coronation trade, which is making a profit there of 2,750 Rand. So all in all, our portfolio is worth 361,000 Rand, so it's up 44.5% for the year to date still.
So it's gone backwards ever so slightly in the last couple of weeks.
Yeah.
Garth, do you find normally you have this sort of calmed period and it's a bit tricky for you? I mean, I know people have, there are certain times when it's better for an individual trader than others. Is this your difficult time?
It is actually. If I look back at my trading history over the years, I've always found August and sort of the middle of the year to be a bit of a tough time. And there is that saying, sell in May and go away. And I do tend to think there's certainly some truth in it. Maybe it's a self-fulfilling exercise. But I've historically found that my best trading months are generally the first quarter of the year and the final quarter of the year. The middle of the year sometimes can be a bit tricky. And that's certainly been the case with our portfolio this year. I mean, we've been stuck at around this 360,000 Rand area on our portfolio now for about 2 months.
Yeah.
So
Well, the BERS are coming up, September, October, November, December, so hopefully they'll provide some sort of stimulus to our own portfolio. Just very quickly to end off with Garth, dates for upcoming courses.
Okay, the next course that I'm running will be on the 13th of October in Johannesburg. So anyone that's interested is welcome to email me, garth@traderscorner.co.za, or you can get me on Twitter or on Facebook, and I'll send you the information.
Great. We have to leave it there. Garth, thanks as always for joining us.
Thanks.
That's Garth McKenzie, the founder and editor of Traders Corner.
Traders Corner was proudly brought to you by IG Markets South Africa. Trade the South Africa 40 Index or over 140 share CFDs at just 0.2% commission on our intuitive, award-winning online platform. Visit igmarkets.co.za to find out more.